Welcome everybody to our third EFAA webinar, Future of SME Reporting, Implication of COVID-19. I hope that you stay safe and healthy. As you can check, this webinar is held in a special collaboration with Richard Martin, Head of Corporate Reporting at ACCA, Chair of EFAA Accounting Expert Group, a very good chair and very good expert group. He has a long background in EFAA, and he's helping our organization a lot. Thanks for that, Richard. I noted that the participants in this webinar know very well EFAA, our strong organization that representing over 360,000 accountants, auditors, and advisors. Our members, you know very well, are professional accounting organizations that representing SMEs and professional firms of medium size. For those reasons, this webinar is of high interest for us. Why? Because our members, the most important is that we provide services to millions of SMEs and self-employees. For that, we need to adapt our activity, and of course, reporting. Reporting is, as you know very well, is a key activity for us and for our SMEs. In my opinion, we are doing well in this side. Our SMEs, they are showing their quality in this field in Europe in relationship with their customer, with their
is
SMEs.
now joining.
In this way, from EFAA, with our principal focus in Europe, we are doing a lot of things. For example, if you visit our webpage or by social media, a COVID-19 position statement is important position because in this position we are explaining what is our activity, for example, in reporting. Our useful guidance for SMEs, our recently positioned statement about professional services for single market, highlighted the risk of market concentration, or about other reporting, no financial information for SMEs, and our activity, our expert group. Important expert group is accounting expert group, but we have other expert group like assurance, digitalization, and professional regulation in Europe. EFAA, the competent regional accountant organization in Europe, focusing only on SMEs and SMEs model. And I think that our role focusing on SMEs through the SME these days is more important. We are gaining in influence in the European Commission and the European Parliament. And our opinion and voice is heard. For example, when we have the information about this webinar, we will share in our meeting with the member European Parliament or the staff in the European Commission. One current matter is post-COVID-19, and for those reasons, today we are putting the focus on it, COVID-19 and reporting. Please welcome Richard, our keynote guest speaker, and welcome to Paul Thompson, our EFAA director and moderator in this webinar. Thank you so much for your participation. Richard and Paul have a vast CV and experience. I am sure that their presentation will be good for all who are attending. We have received previously a lot of questions, but I am sure that Richard and Paul will help answer this question. Please, Richard. You take the floor.
Okay, thank you very much, Salvador, and welcome to everybody. And very glad of the opportunity to speak to you today. As Salvador says, we're looking at the COVID-19 and the company reporting, So what are the impacts? Well, obviously, as COVID-19 started to have an effect, and everybody started to get some idea of what the the impact was likely to be. Obviously, the main thing that perhaps people were thinking about was, I need to do a reforecast. I need to think about how we're going to adapt the business to deal with the new situation. Have we got enough? Have we got enough cash, or have we got the borrowing facilities in place in order to cope with the likely effect? So all of those business issues about strategy, about survival, in a way, were perhaps the top of the agenda. But at some point, these companies are going to have to report on the impact of the COVID-19, and that's what and obviously, as the EFAA members are going to be much involved with that reporting. So it's that event which perhaps is going to follow the first impact is clients, SMEs are going to be worrying about all sorts of business issues, but at some point we will be turning to reporting. So what I want to talk about is this is just a quick summary. We're going to look at the question of different year ends. So December 2019 and other year ends that came before the pandemic struck in your country. And obviously, we do know that the measures that started to be taken to deal with the pandemic were at slightly different times in different countries. So if you think about the ones that come before the pandemic, December, January, February, perhaps, then there are the period ends that are going to be after the pandemic, which will include some effects of the lockdown or other measures that are going to be taken. So I'm distinguishing those two for a start. I will be concentrating on the financial statements, but we will also be we should be thinking about the narrative reporting that companies may want to do. And in thinking about the financial statements, obviously we have various differences which in any discussion may apply to the particular case that you're looking at. So, for example, there will be maybe some reporting under IFRS or on systems related to IFRS for SMEs. So that is one group where the rules, the accounting required may be determined by that. But there are obviously for most SMEs, it's going to be a question of national gaps, the national standards and national law, and those will vary, obviously do vary. But we have in Europe obviously a common base in the accounting directive and its requirements. And the accounting directive and its requirements do make some important distinctions between small companies and other sorts of companies, medium and larger companies, and also in some countries there will be the question of micro entities and what they're required to show. So hold on, have I done forward too far? Yeah. And the other impact's been that, for example, if we're thinking about December 2019 events, we do observe that in quite a number of countries, filing deadlines for the finalization of December 19 accounts have in some cases been extended because of the COVID-19 and the distractions of that I've spoken about, the business management and strategy issues are becoming so important. Onto those those year ends, and we'll look at the first bit, which is the year ends the December year ends, perhaps January and February if they exist. The year ends before the pandemic measures were introduced. And as we've noted, the incidence of those measures will vary from country to country. And obviously the first countries that were affected were China and some countries in East Asia, but SMEs may have been dependent on supply chains or indeed markets in those countries, and so the impact of the measures may have come slightly earlier. But in many cases, what we will be talking about measures that were started to be put in place in Europe during February and March. And obviously, as a sort of guideline, the World Health Organization declared the outbreak of pandemic at the end of January. So, were the accounts approved before the pandemic became evident? Then obviously we would not expect to find anything in there. The key thing is if they are approved after the impact of those measures became obvious. And hold on, I've lost the slides for some reason here. Oh dear. Right. Nope. Oh. Sorry about this. I obviously pressed the wrong button. I need to go back to where we were. Screens. No. Give control. Right. Yep. Yeah. Oh damn. Apologies for this. I've just lost the screen. Here we go. So right. Okay. Right. If it's after then it could take if the approval is after that date when the pandemic struck, then obviously there could be an impact on the accounts. It is quite, in some ways quite a limited impact on the accounts, because I think most people are taking the decision that if the measures were brought in say February and March, and you are reporting on a December year end, then that will be treated, certainly under many accounting systems, as a non-adjusting event. It's an event after the reporting period, which you may need to make reference to, but it is a non-adjusting event, and so we're talking about disclosure and not something which affects the reported performance of the company in the period, or affects the value of assets and liabilities shown on the balance sheet. So a disclosure item. Now, some of this disclosure is, however, highly important and highly sensitive, and the most important, I suppose, is the question of the going concern basis of the accounts. So directors, companies need to consider whether the going concern basis of the accounts is appropriate or not. If it's not appropriate, and I think that would be a rare case, then obviously you would need to prepare the accounts on a completely different basis, whether they are December year ends or not. More likely is that there are concerns about the going concern. There may be problems in terms of the forecast ahead, may be entering quite a difficult period for the company, and so there may be material uncertainties concerning the going concern, and as I say, in many accounting systems there would need to be disclosure of those material uncertainties. So that is a reasonably common case, not for everybody by any means, but I think it certainly is turning up. I'm currently reviewing a number of listed companies, and certainly among them, material uncertainties are appearing, particularly obviously in sectors that were that are likely to be very very impacted. So so the leisure sectors, travel, to some extent construction and so on. So these are the sectors that are most obviously affected, and we are seeing cases of material uncertainties about which mean the accounts are prepared on a going concern basis, but the directors and indeed the auditors, if they're being audited, should need to draw people's attention to the fact that there are material uncertainties, and those we're seeing a number of those very often about borrowing covenants, so loan conditions that may not be met in the future. Some companies are renegotiating those loan conditions such that they will be able to mitigate any temporary effect of not meeting them, or it may just be general uncertainty about the length of the closure or reduction in business activity in the future. I put it there at the bottom, management reports. So outside the financial statements, there may be, and we are seeing that with listed companies, much more disclosure than perhaps would be true otherwise. And I think SMEs should be thinking about that. But more of that later. I'll come to that at the end. So we need to. I need to get back to the. Yep. Now then, I'm also looking at how
I'm controlling the slides.
Ah, right. Okay, thank you. Because I lost the slides.
I am on slide 6.
Okay.
Yes,
should I take control back? Yep, probably. Yep. Okay. So year-ends before the impact, we've dealt with those. So going concern and possibly some explanation in the management report, but we'll come to that. Now turning to the time when the measures are in place, and again these vary from country to country, as we've noticed. So there may have been restrictions on those sorts of industries we've talked about: travel, leisure, retail. Many countries have put in requirements that loans, the repayment schedules for loans can be, people can be given a holiday from making loan repayments or paying interest on loans. On loans, governments may be stepping in to make guarantees for those loans, and in terms of leases, again, many property companies, or there may have even have been in legal requirements that tenants are given holidays from lease repayments. So that may be happening. There may be government subsidies, direct subsidies, or payments for maintaining employees in their jobs, so job retention schemes, which need to be, and all these things do need to be accounted for. And the impact of all these, and that I think we're very much looking at now, is a major. It's not a measure that's been taken, but as a result of the pandemic and indeed the measures taken, there will be almost certainly a major economic recession already happening, and certainly lasting for perhaps a period of a year. We don't know, but that's considerable uncertainty about that. But it looks like we will have that impact to deal with as well. So a lot of things to think about in terms of the accounting, and so how does this reflect in terms of reporting? Well, if we think about assets, first of all, that's probably the most obvious way in which these effects are going to need to be reporting, and firstly on impairments. And property, plant and equipment, I suppose, is one of those that's very much in focus. So, are those values are the values of those assets going to be sufficient? They're carrying values. Are they going to be worth what they're in the books at? In terms of the pandemic and what follows in the economic recession. IFRS for SMEs and other systems may have a case that you only need to do those impairments if there is a trigger event, a sort of an event which points to the fact that there may be impairments there which you need to measure. And it's difficult to see that in a major economic recession, these closures are not a trigger event. And so I would expect that many SMEs, particularly those in sectors that are deeply affected by the lockdown and by the oncoming recession, should be thinking about should be measuring those impairments and taking those into account. Clearly, measuring the realization values can be difficult in some cases. A number of listed companies certainly are reporting that, in terms of that the market for property, for example, has become very thin during this period, so there are very few transactions for people to base those measurements on. Tangibles, much the same, that those should be subject to impairment. Goodwill, if that's appropriate, if you've been making acquisitions, perhaps less likely with SMEs than with listed companies. Inventories. Just looking at the listed companies, that has been a major impact in the retail industry, in the hospitality industry. A number of cases, inventories are both, are likely. There is a risk that some of those will not be able to be realized at the value that they sold, either because the fashion has changed, or that actually food and drink goes off and doesn't work. So there may be there. Assets at fair value, again, I think we've sort of touched on that in terms of property, for instance, in property companies where or investment properties that are shown at fair value. There is a bit of an issue about getting those reliable fair values at the moment, but those will be tending to show, suspect in many cases, significant falls. There are other financial assets, and a number of impairments are coming through there. Those may be, and for SMEs, maybe often the trade receivables. So in an economic recession, if that is looming, then we'll need to be extra careful with the provisions for the collection of financial assets. The other thing that is coming up in some industries is the question of hedging. So if you have a SME that's particularly involved with foreign currencies or with particular commodities, then they may have hedge accounting, and may have been doing hedging of those, some of which may now be ineffective because of the close down of the reduction in business activity. Finally, with banks and other lenders is obviously going to be a big issue, but I think less important for SMEs. In turning to liabilities, then there may be more liabilities, and liabilities whose may have been increased by the pandemic. So certainly, I think a number of companies will be looking at restructuring their businesses. There may be redundancies, particularly after job retention schemes come to an end, and so we should be aware of those, and onerous contracts. For example, leases. So leases of properties that are never likely to be used again may turn out to be onerous. For instance, people will be reviewing bonus schemes to see whether some of those may need to be reduced in the light of the financial constraints that companies are operating under. Borrowing covenants I've mentioned as a going concern issue, and that may also determine whether liabilities are current or non-current. So a number of things there, and a number of things which I've just called recognition issues. Lease holiday accounting, not very clear. The ISB has made clear, I think, how lease holidays should be accounted for under IFRS, but that may not be true of national gaps. That's been as clear how you should do it, and I guess the two main questions are: should you spread the benefit of the holiday period over the life of the lease, or should you take it, or should you just recognize that you are paying reduced or no rentals during the period of the holiday that's been granted, say, for 2020. Government subsidies we've noted are in place. So are these actual grants that you will receive? In which case I think they're to be accounted for like government grants, or are they just costs that have been avoided? And so in some cases, certain government taxes have just been waived, and so those just are a nil cost or reduced cost. There is a sort of issue about whether you're, for the other ones where you actually receive against a cost that you have, say employment cost, should you be showing those gross as an income or as a net presentation? And some presentation issues. We're dealing with reports that come after the pandemic, so March, June reporting periods. These, of course, the going concern issues will apply just as much here as they do for the ones that we were looking at in December, and these very, very important. In terms of performance presentation, there may be, and certainly listed companies, we can see some separation where they're trying to pull out the effects of some of the effects of the pandemic into a separate exceptional item or disclosure in that way. But some are just reporting the results and explaining the results in the narrative form. Obviously, for many industries like travel, retail, and so on, the effects are principally about a reduction in revenue while shops are closed and nobody's moving. And that difficult to see how you could, other than in narrative form, explain the effect there. But costs, of course, that are incurred are easier to report and maybe reported separately. So some things to think about there. I think for periods both before and after the pandemic, narrative explanation may be more important in this case. This is, we have to accept, in most countries, a very exceptional circumstance that we're looking at, where not only have a recession that is underway or on its way, but we have this closure for many industries, or reduction in activity. And I know that in many cases, not much attention by SMEs has been made on the narrative reporting. There are, under the accounting directive, for example, there is to be for medium and large companies, there is a reporting requirement to include a management report. Perhaps not much emphasis has been put on that other than what is the legal minimum. In this rather exceptional circumstance, I think perhaps companies could think about trying to provide more narrative explanation. We've certainly seen that both in the management report, but also there is sometimes a post balance sheet, a post events after the reporting period note, where some of this can be put in, and that might be in the financial statements. But I think something somewhere in the report doing which is perhaps more forward-looking than simply reporting on what's happened might be appropriate in these circumstances. And if you were expanding that, I think thinking about strategic response, the risks that companies or opportunities that companies see in that, and the likely financial effects are things that people might be considering, and indeed listed companies are indeed reporting on. So that in a way is what I wanted to say today. Just by way of conclusion and sort of summing up, I would say if you are reporting on a period before the pandemic measures were put in place, the December year ends, January, February perhaps, then the principal focus is on going concern, very important issue, and as I say, a very sensitive issue in terms of what disclosures can be made. And you might think about some narrative reporting or a post-balance sheet event note. If you're dealing with reports that include a period when those measures were in place, then there are much bigger impacts, because they are the value of assets and liabilities do need to be the effect of those measures need to be incorporated when you are thinking about the value of those assets and liabilities, and indeed therefore the effect on performance. And as though there are important measurement issues, particularly around impairments of assets, but also new liabilities that might be taken into account. And as I've said, perhaps some more narrative explanation in these unusual circumstances may be appropriate. And obviously all of this is more important in certain sectors and perhaps in certain countries. The effects will be different, and that needs to be thought about. But thank you very much for your attention to those few ideas I hope I've given you. And over to any questions or comments that you want to make. But that's principally, I think I'm handing over to Paul at this point to manage those. So Paul.
Many thanks, Richard. That's very insightful presentation there, running over some of the financial reporting implications of the COVID-19 pandemic, and of course a lot of it coming as a consequence of the measures that have been put in place, lockdown in particular, which, as you say, may have had quite a severe impact on some asset values, etc. To get the ball rolling, I have a couple of questions of my own, but I do encourage those of you on the call, if you wish to ask a question, you can do it one of two ways, either in the meeting chat on the right-hand side of your screen. You can type the question and I will read out the question to Richard, or alternatively, if you wish to pose the question yourself, then I would suggest that you use the raise hand function in the Microsoft Teams, and I will then sort of pick you out. Richard, a few questions, and what I want to do first of all is pick up on something that you have touched on a couple of times. Obviously, the primary focus of your presentation has been on financial reporting, but increasingly, of course, there is an appetite for non-financial reporting. I wonder whether, as a consequence of COVID-19, you foresee a greater role for non-financial reporting by SMEs, and is that something you see will trigger more NFR by SMEs?
Yeah, thanks, Paul. I think that's perhaps right, and I think in a way I think SMEs should think about more reporting, because the financial statements are essentially historical, so they are reporting on periods back, even though there is a degree of look forward with impairments and so on that require the financial statements to be forward looking. But I think in terms of reporting what companies are doing about this changed situation they find themselves in, then I think narrative reporting of one sort or another would be a good idea. I think it'll be very interesting to see whether there's greater take up of that among SMEs and unlisted companies. I think it hasn't been. I think in many cases that I look at anyway, it hasn't been a particular focus for SMEs. Legal requirements, yes, those of course have to be put in, and in some countries a management report is required of small businesses. Obviously, under the directive, member states have that option, and in other countries it won't be required. But I think some more explanation somehow may be appropriate in these, in these rather exceptional times. So it'll be, I think, interesting to see whether it has that impact that you're talking about.
Okay, thanks, Richard. I think it's true to say as well that for many SMEs that lack the in-house capability to prepare financial statements, they're often relying upon an external accountant, oftentimes a small and mid-sized accounting practice, to do it for them. And I'm just wondering what kind of practical challenges they are facing at the moment, because, of course, the external accountant may not even be able to get access to the client, be able to come to their premises, for example. I'm just wondering what's the nature of those challenges, and how are SMPs and their clients getting around these challenges?
Yeah, I didn't really I didn't really touch on that, but there are clearly issues for those. I mean, you only have to think about inventory, and if you had a March year end, you might not have been able, the company and certainly the accountants or auditors might not have been able to do what they would normally do in terms of inventory verification or and valuation. So yeah, there are practical difficulties. I think as well there is just a sort of, I'm very conscious that I think the principal distraction, the principal sort of focus for SMEs and probably for their financial advisors, the SMPs as their financial advisors, will have been on thinking about how the business is going to cope with this changed situation, and what financial help they can apply for, or what can they expect from their bank. There will be these very urgent issues that are getting in the way, but it just simply, in terms of when it comes to preparing the reports, there will be difficulties. I'm sure businesses and their advisors are I'm not trying to do it myself, but I do see cases where people are working around those difficulties, and remote, the cloud storage of data and so on has made all that much easier than it was before. So I think people are getting much more used to working in a sort of online or virtual way, or or importantly perhaps not physically attending premises to do the work required that businesses need. Just a few thoughts anyway. I think others may well have better and more informed thoughts on those issues, but I could certainly see the distraction issue. There are bigger things, and that's in a way why a lot of countries have extended filing deadlines, because they recognise that companies and their advisors are going to be taken up with perhaps other, frankly, more important things about before reports and reporting is needed.
Thank you, Richard. And I think on our next webinar, which will be held on July 23, when we speak to representatives from the International Audit and Assurance Standards Board, I'm sure we'll also come up and discuss the issue of remote auditing in that context too, and arguably remote auditing offers even more challenges than the remote accounting that we're referring to right now.
Yes, yeah, I'm sure that's true, and I'm sure again, the going concern issues will probably be in the forefront. Obviously, auditors or reviewing accountants, are very. They've got responsibilities there, specific responsibilities, which I'm sure you'll be covering.
Yeah. The third and final question that I have, again, just to repeat for everybody, if you have a question, do not hesitate to put it into the meeting chat or raise your hand, and we'll bring you in on the conversation. But my third and final question relates to what the ACCA itself has been doing to support SMEs, and in particular the accountants of SMEs. I do understand that you have quite a comprehensive resource centre. I just wondered whether you could share with us what the ACCA is doing, and will continue to do to help accountants of SMEs.
Yeah, I think a number of things. Firstly, information, and we've been like other people, assembling COVID-19 related information on a hub, and I think EFAA has been working on that as well. So that's information which has covered the sort of things that I've talked about today, but perhaps more prominently things about strategy planning. We've done 2 surveys of accountants and what they feel are the key things they're thinking about in terms of the impact of COVID-19. We did one in March, and we followed that up with a second one, and so you can see that. I think so. Information, but also we've been active in lobbying governments and other agencies in terms of providing good support for SMEs, and because I think it's quite clearly noted that big companies on average may have bigger resources in terms of people and indeed borrowings and money to cope with this crisis, and SMEs are struggling more in terms of maybe on average struggling more in terms of those things in the relevant sectors. So information, surveying to try and highlight what other people are concerned about, and lobbying. I would pick out, Paul.
Thank you, Richard. And for the benefit of those on the call, I have put in the chat box a link that takes you to the ACCA's coronavirus resource centre, where I think you will find stuff on reporting and regulation. I'm sure most of which perhaps you've authored yourself, Richard. So for those of you on the call, please just click through that link and it will take you to the ACCA's resources. Now, we do have a request from Robin to pose a question. Unusually, Robin, you must be quite literally around the corner from Richard, just a short walk away in South London. Could have almost posed it yourself, face to face.
Not quite.
At the end of the garden fence.
Not quite.
Not quite.
South London is quite a big place. Anyway.
Spread.
Go ahead, Robin.
Spread.
Go
Okay.
ahead,
Well,
Robin.
one of the issues, it seems to me, that stakeholders, investors, will want to get some information on is not just what's happening now, is what's going to happen in the future to SMEs, particular SMEs. And I was just wondering of how much or to what extent do you think that, you take the case of a PLC where the chairman's report, director's report and so forth is more and more directed towards giving hints to investors and other stakeholders about the future of the company. To what extent can SMEs convey in their financial reports such issues as that?
Yes, good question. Thanks, Robin. Because I was sort of emphasising all this narrative reporting. You're really asking what sort of narrative reporting could they include? I think looking at listed companies around the world, the amount of forward-looking information is quite variable from country to country, and I think that represents both requirements of stock exchanges and so on, but also sort of expectations of investors and lenders and so on, that they want more forward-looking information. Now, some of that is in the form of trading updates and so indicative performance. I haven't seen that many. I think probably what I would expect SMEs to think about is perhaps just talking about not so much in terms of numbers that you might predict happen, but how you've reacted and what your approach to dealing with this particular circumstance we find in is. So what's your, I think useful is to give a sort of idea of how long you're expecting if it's a reduced performance to last, how you're mitigating some of the what you see as the impacts on your business and how you're mitigating those. So I think it's more about strategy and than perhaps than giving. I wouldn't necessarily encourage very good or detailed forecasts, because I think that's both difficult, very difficult to do in the current circumstances for many of the companies most impacted, and also I don't think it's probably a sort of unreasonable demand. So I think it's more about what the impact has been on your business, how you expect that to evolve, and what you're doing in terms of response.
Is now exiting.
Your micro, Paul. Your micro.
Happens all the time. Yeah, what I was going to just to remind everybody is the fact that this year, of course, the non-financial reporting directive is being reviewed by the European Commission, The anticipation is that review will conclude in the first quarter of 2021. And one of the things that they're looking at seriously is whether to have a EU-wide non-financial reporting standard. And in fact, they're even considering the possibility of having an EU-wide non-financial reporting standard for SMEs. These are both things that are under serious consideration right now. Just a few days ago, the European Financial Reporting Advisory Group, EFRAG, has in fact already been asked to help prepare the ground for an EU-wide NFR standard. So things are likely to be moving quite quickly in the latter half of 2020 in that space. And we, EFA, will do our best to keep you abreast of those developments. We have responded ourselves to the public consultation on the non-financial reporting directive, and we'll continue to lobby and advocate on behalf of SMPs and SMEs in Europe in the coming months. It's now just a couple of minutes before the hour, so it does not appear that there are any other questions. So what I would like to do is just move over to a few concluding remarks, Sarah. I guess this is our closing elevator pitch, if you like, just to remind you that we at EFA, together with all of you, representatives from our professional member institutes, collectively seek to be the big voice for the SMP across Europe. We do feel, of course, that there's a very close proximity between the small practitioner and their SME client. And in these trying times, I think that relationship needs to be even closer than ever. I want to remind you that we do have a forthcoming webinar which will be focusing on auditing and assurance. It's called The Future of SME Auditing, the implications of COVID-19 and standard for audits of less complex entities. And it will be at the same time, on the same time as this presentation, on the 23rd of July. So that's 2 o'clock Central European Standard Time. And we're pleased to have the technical director and the deputy technical director of the IWSB addressing us on that call. Okay, so I would like to close out the presentation. Thank you, Richard, for your great presentation. Thanks all of you for being with us today. And we look forward to seeing you on the 23rd of July.
Thanks.
Thank you very much, Richard, for your intervention. It was very interesting for our organization, and thank you very much for all participants. I think that we have learned a little more about the COVID-19 and reporting and the changes. Thank you, Richard, and thank you.